Well, several companies warning of an anticipated consumer spending slowdown in the year ahead. But what are restaurants seeing? And how are they navigating that possible headwind? First Watch is a daytime dining concept serving breakfast, brunch, and lunch with more than 500 locations across 29 states. Shares of the company are up more than 45% since the year began, significantly outpacing the S&P 500. First Watch's market cap currently surpasses $1 billion. Joining us with his consumer outlook is Chris Tomasso, who is the First Watch Restaurant Group CEO. You know, I've been to one of your fine locations in Newark, Delaware, so I've had my own experience over at First Watch. Tell us, though, what are you seeing in the appetite of the consumer right now based on the ticket size, based on what they're ordering, and the amount of visits that are taking place?
Yeah, I think we're seeing, that the consumer still cares very much about hospitality and about gathering. And I think there's an underlying optimism. We mentioned on our third quarter earnings call that, our dining room traffic has been up. The consumer is opting for the full experience when they come into our restaurant. So, they're getting that extra beverage, they're getting that shareable. So, the fact that they're doing that for us is a great sign. I do believe that, consumer confidence is up. I think that, what consumers look for in restaurants are consistency, value. And I mentioned that previously that there's a consumer's flight to quality right now. They want reliable, consistent, friendly service that's at a value and high quality foods. And that's what we deliver. And so, we feel good about the rest of the year.
Chris, in your last earnings call, you also mentioned the fact that some of those inflationary pressures seem to be easing just a bit. Are you passing some of those cost-saving measures along to consumers? And what are you doing as a result here, more broadly speaking, for your menu pricing?
Yeah, so we've actually been probably one of the most conservative restaurant companies as it relates to menu pricing. So we felt like what was being experienced was transitory. So we didn't want to make a long-term permanent decision based on something that we believe was not going to be a permanent impact. And so that's how we've addressed it. And I think, our focus on having more visitors in the restaurant, so increasing traffic and not turning them away by overpricing and then therefore turning to discounting, which we don't do. We've just been very conservative on pricing leading up to it. And I think that's why we've seen the performance that we've had because of those decisions that we made over the past really 18 months as it relates to pricing.
Yeah, you got some of your competitors out there that want to, woo people by some margaritas. Hey, I'm a margarita lover too. Why not? As much as the next person. Woo people by French fries. And so it's interesting always what really gets people back in the doors, especially in an environment where some consumers are trading down, some are deciding that we need to cook more at home. When you kind of hear from the consumer through their dollars, where are still kind of the hot spots that you're seeing them buy into this restaurant experience, and where are you having to invest to make sure that you're changing that experience as well?
Well, we're in an enviable position where we have a lot of unmet demand in our peak sales hours. So our focus has been on increasing those high throughput hours. We've heard from the customer and our consumer specifically that they love us. They want to go faster. And so we're looking at all the points of friction that might be in our system and trying to remove those and really deliver an exceptional experience. And our operations team has done an amazing job of that. And we'll continue to focus on that. So I think it's a little bit different for us. As I mentioned, we don't discount. And sooner or later, those that do will have to unwind those. And we don't want to have mixed messages to the consumer. We believe we're a high value offering and with our everyday pricing. And so that's what we're sticking to and really focusing on the quality and on their experience.
Is an expansion of hours to dinner being evaluated something that we could potentially see in 2024?
It's not. It's core to our business to be a daytime only concept. And one of the promises we make to our employees is that there's no nights ever. And that's really helped us attract the best and the brightest and historically have lower than industry average turnover. And so we believe it's part and parcel to who we are, and it's really core to our brand.
Chris, to that point then, what you were just talking about, just attracting workers, are you able to get the workers you need? We have talked to so many restaurant owners over the last several months about the fact that they cannot simply find the workers that are necessary to operate their restaurants. It sounds like that might not be the case for you.
It's not actually. And it's interesting, prior to the pandemic, we really leveraged our no night shifts ever differentiation and employee proposition. And that allowed us to manage very well through, when unemployment was at records. and it's helped us now as we differentiate ourselves. And I think people are looking for that work-life balance, and the restaurant industry is historically known for long hours and can be a grind. And so we're definitely an outlier there by allowing people to have that career in hospitality if it's in their blood, but still have a life after work and spend time with their families and be home every night for dinner. So we'll continue to leverage that. It really has been a key part of our overall proposition.
Chris, have you had to raise wages at all?
I'm sorry?
Have you had to raise wages at all just to stay competitive with some of your peers who are doing that, who haven't had as easy of a time here just retaining their workers or attracting new workers?
Yeah, I mean, we look at it on a market by market basis. We obviously have to be competitive if we want to attract the best and the brightest. But I think the entire package of what we offer, from competitive wages, incredible benefits, again, an environment that is extremely different than the rest of the industry, has allowed us to differentiate ourselves when it comes to hiring. So, but yes, we've had to deal with not only legislative wage increases, but also market pressures. And so we've always been above minimum wage, and we'll continue to do that and provide the environment that attracts those folks that we want working in our restaurants.
Chris, great to speak with you here. Chris Tomasso, who is the First Watch Restaurant Group CEO. Appreciate the time and happy holidays.
Thanks. Same to you.